Inflation expectations spiked. You've got more tariff talk from the White House. And then I saw a report, too, from Jake Sherman, Punchbowl News. $4.7 trillion tax plan is what the Republicans are said to be discussing. I thought the market took a little bit of a move lower on that as well, just given where rates are, concerns about the deficit, et cetera. Your thoughts on all three?
Well, you know, it does seem like a pattern in 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMich.
Tom Lee discusses market challenges like rising inflation expectations, tariff uncertainty, and a proposed $4.7 trillion tax plan, which have fueled volatility. He notes that the market remains resilient despite these pressures, supported by strong investor confidence and consistent buying during sell-off. Lee sees opportunities in industrials, financials, and small caps, even as large-cap tech stocks show softer growth. He emphasizes the market's adaptability, with January gains reinforcing bullish sentiment. In AI, SoftBank's $40 billion investment in OpenAI underscores the fierce competition in the race for dominance. While OpenAI faces challenges from rivals like DeepSeek, its strong resources and brand provide a solid base for staying ahead.
They're not great to see, but also I think that they are messed, or there's a political component to this, because if you break that down between Democrats who see 5% inflation and Republicans at zero, the blend is actually pushing this number up. But to me, it just gets messy around elections.
Yeah, but I mean, let's be honest. There are broad concerns about parts of this agenda from this White House, including, I might add, from the Fed, that it could be inflationary. When rates are already more elevated than I think the Fed would like to see. They'd like to be able to cut more, but their hands are tied. And one of the reasons their hands are tied is because of tariffs and unknowns about inflation. Fair?
That's fair. I'm not sure the UMich survey reflects their assessment necessarily of the tariffs as much as, let's say, the bond market. And the bond market seems less concerned about it because, as you know, yields have backed off from 4.8 towards 4.5. But you're right. Tariffs are a reason to be uncertain. But so far, I think if I looked at how markets reacted, I think they've actually taken them in stride.
I mean, your biggest takeaway thus far, you say, is that the market's proving resilient, which, I mean, let's be honest, too. Since the start of this bull market, it's been one heck of a resilient market. It's been able to deal with almost anything thrown in its face. You've had a couple of panic moments. Monday off of the tariff news, last August with the unwind of the carry trade, and then we just continue to set new highs.
That's right. And I think in 2025, a lot of investors thought maybe the playbook would change because we just put 20% years behind us. But I think with January being up 2.7%, and I think these sell-offs being bought, it does feel like the same market that we had last year.
What are you worried about?
Well, I'm worried about sentiment becoming too bullish, but actually But it's turned the other way. You know, sentiment actually has weakened pretty meaningfully. And I'd worry about a policy error from the Fed. And as you know, the bond market still thinks there's more than a 20% chance the Fed hikes this year. I think it would be obviously a policy error if they raise rates.
What about a policy error from the White House?
That's also something markets worry about, yes. But so far, I would say that the news that we've seen on tariffs, they've had more bark than bite, meaning they've proven to be opportunities for investors to buy.
What would you buy?
Well, the big news this week in our minds is the ISM moved back above 50. That really does point to earnings dispersion improving. So I like industrials, you know, the financials. I mean, the small caps, which have been, you know, not a great outperformer yet, but we still think small caps are going to do well this year.
What happens if some of the uncertainty around D.C. and policy has a more negative impact on not only sentiment, but actual transactions? I saw a stat today that M&A is off to an incredibly slow start this year, when part of the narrative coming into this year was animal spirits. Can't tell you how many times I heard that phrase over the last 3, 4, 5 months.
Yeah.
What if we don't get that?
I mean, it's still too early, right, because we're only 1 month into the year. The recovery and optimism, both in the NFIB and even the ISMs, I do think it would sort of argue CEO confidence should be better. So I would expect M&A.
We had all but one of the mega caps report. We got to wait a couple more weeks for Nvidia. What's your takeaway?
Well, it's been a good earnings season so far. The Mag 7 as a group hasn't been great. You know, in fact, they've been a drag on the S&P this year. So part of it is it's telling me I think a lot of good news is baked into some of these names, and especially with CapEx going up. But it doesn't mean I don't think they're market performers. I just think the outperformance this year comes from financials, small caps, industrial.
Canaccord's annuity today on the Mag 7. We think it's fair to say this has been the softest quarter for this group collectively in the last few years. Is that a meaningful softness that maybe the best times for a while are behind it?
Well, and that's a relative term, right? Because on an absolute basis, these companies are growing far faster than the S&P. But from what's priced into the stocks, clearly it wasn't a market surprise. That's why year to date they haven't been great.
What about you're paying up, in some respects for declining revenue growth, especially in key areas like cloud for some of these players where that's an essential part of why you were willing to pay up in the first place? That matter?
Well, these are secular stories. So to me, stocks might actually underreact to earnings and they might overreact to earnings over time, and they may consolidate for several years. But to me, the key drivers for why you want to own the Mag 7 haven't changed.
Seems like these names have sort of separated themselves from each other. If you look at a chart, for example, of Meta, it's been magnificent. It's like the Magnificent One.
SoftBank close to finalizing a $40 billion investment in OpenAI that would value the startup at an eye-popping $260 billion. That's according to sources telling our own David Faber. Just the latest in a flurry of signals from tech that AI spending is not slowing down after DeepSeek. Our Drew DeBosa watching that in today's Tech Check. Happy Friday, Dee.
Happy Friday, Carl. So SoftBank's massive investment, along with more CapEx spending by big tech, that might seem out of place in a new AI paradigm where the best performing models are cheaper and they're more efficient. But think of it as an AGI at all costs strategy. Masa-san and OpenAI's priority is to push the technological frontier relentlessly. The idea that reaching it first is worth any investment, rather than relying on incremental improvements that DeepSeek proved can be reached through a process called distillation. That's where a large complex model is distilled into a smaller, more efficient one. Distillation yields more cost-effective performance gains, but it doesn't drive the revolutionary breakthroughs needed to reach AGI, or ASI, as artificial superintelligence is known. Masa-san, we know this, he only thinks big. So this is a long-term vision over OpenAI's short-term challenges. Those challenges, though, they are growing quickly and really eroding that moat that OpenAI has held for the last 2 years. Not only did DeepSeek's R1 model match OpenAI's O1 model on performance, but it revealed chain of thought reasoning, something that really delighted users, propelling it to the top of the App Store. OpenAI has since followed suit. It's also made its O1 model free, suggesting that OpenAI is now following the competition rather than leading it, as it has been over the last few years. So it went from pioneer potentially to playing catch up. A few more examples here. Its latest deep research feature, that's being reproduced by Hugging Face as an open version. And however much you think DeepSeek spent on its model, AI researchers at Stanford and the University of Washington, they were able to train a reasoning model for under $50 in cloud compute credits. It took them something like 45 minutes. And while Chinese labs and companies, they have proved over the last few weeks that they are incredibly fierce competition, American heavy hitters, they're about to make their move. Reuters this morning reporting that OpenAI co-founder Ilya Sutskever's his new startup SSI will be valued at over $20 billion in a new funding round. Meanwhile, OpenAI's ex-CTO Mira Murati has recruited another OpenAI co-founder, John Schulman, to her startup. That's going to provide more competition right here at home from the people that know OpenAI better than anyone. This is all to say, guys, that the urgency for Altman and OpenAI and now Masa-san to make these new transformative breakthroughs is rising. Still going for it, the company has mind share and brand distribution and talent, and soon it'll have a fresh $40 billion in capital. So you can't count out OpenAI, but you do have to recognize that this is a whole new race. OpenAI has the firepower, but now it has to prove that it still has an edge, and that is going to be difficult in the years ahead.
Tom Lee discusses market challenges, including inflation concerns, tariffs, and a proposed $4.7 trillion tax plan, noting their impact on investor sentiment. Despite this, the market remains resilient, with sectors like industrials, financials, and small caps showing potential for growth, even as large-cap tech faces softer performance. In AI, SoftBank's $40 billion investment in OpenAI underscores a competitive race for dominance. While OpenAI faces challenges from rivals like DeepSeek and emerging startups, its resources and influence keep it in the game. However, the need for groundbreaking advancements is more urgent than ever. Will market resilience continue amid inflation and policy uncertainties? Can OpenAI maintain its edge in the intensifying AI competition?